Hi, my name is Sugra Sharafat and I'm going to be doing my proposal on Netflix. Okay, so my proposal suggests stage 1 for Netflix to slow down its expansion, and stage 2, allocate those expansion costs to a new budget that focuses on original TV series. I propose this because Netflix faces huge foreseeable threat in competition due to the barrier to entries being quite low. And the reason why I focus into original content is because this gains or maintains a competitive edge for Netflix, produces a stronger brand image, increases its publicity, as well as maintaining a steady U.S. market share, and as well as continuing expected growth trends. So on stage 1, slowing down its expansion rate, Netflix plans to operate in 200 countries by 2017 and 50 more by 2018, or by the end of 2017. This rapid growth is actually creating immense costs. It's creating these immense costs because they actually face regulation and policy fees in every country they operate in. So these expected costs aren't actually going to pay off until 2018 or longer. Netflix's international streaming business now loses money, but the company predicted that it would generate global profit by 2017. It is forecasted that they will actually bounce back and maintain or gain this profit by 2017. However, their trends for the rest of the remaining this year, and as well as the beginning of 2016, has been a decreasing trend. They've actually have been losing subscriptions in the U.S. market. Okay, so by focusing back into the U.S. market and trying to increase these subscription base, I propose that they should use the funds that they're spending in expanding into focusing into original series. Because Netflix has benefited immensely from the cord-cutting trend in the U.S., it had a considerable first-mover advantage, as it was one of the first online streaming platforms to pique the interest of the masses. They were the first to promote this idea, and that is why they maintained such a huge share in this industry. However, they are losing out to these competition, which is HBO, Amazon, and Hulu, which is mimic the same sort of marketing strategy and concept and idea as Netflix. So as you can see, Netflix is the reason why it is expected to grow so much is because its trend or its growth pattern continues to increase in the past few years, and is continued or expected to increase for the future. However, as you can see, its expenses have also mimicked the same trend, and they've almost canceled each other out. Its expenses almost eat up its revenue, which is not a good marketing strategy for long-term or short-term. So my proposal is actually going to allocate these expenses by decreasing some of the expenses by 5%. So in other words, a new budget will begin at $16.6 million, and its gross profit is actually, we're going to cut it by half, or allocate half this profit, add it to this new budget, which is going to be $303 million, focused solely on original series. The reason why this budget is quite immense is because of the fact that the basic online series or these shows actually run at a minimum of $3.8 million and higher. House of Cards started at $4.5 million and actually went up immensely after that. However, it does benefit. The reason why, even if it costs quite a bit, the value and the investment into these shows pays off due to the fact that House of Cards, Orange is the New Black, and Hemlock Grove won Emmy Awards. They were actually nominated for 13 in 2013. Netflix just introduced its own production of online shows and immediately was recognized for its great cast and plot. They gained credibility due to the dozen nominations these shows received from a renowned award ceremony that specifically recognizes talent. So So this really shows their credibility from like since 2013, and it really shows where they stand among actors and even among customers, because of the fact that they now have won awards due to these high-rated shows. Okay, so conclusion is that Netflix shouldn't ignore a market due to its growing saturation of competitors. Just because Amazon, Hulu, and HBO are mimicking the same sort of strategy doesn't mean Netflix should just start moving on to other markets. They should still focus on maintaining that strong, that strong portion of the market they control. They should focus on cultivating its image to portray a more unique structure and set of content. So in other words, to differentiate itself from these other competitors by focusing on this new originality and exclusivity onto Netflix. And that is the end of my presentation.
Thank you.